Hello traders, welcome back to another episode of the Traders Show. Today we are going to talk about an interesting topic, a topic that many of you have at heart, and it's part of the future of trading. So many people also ask us, what do you think about trading robots? What do you think about automated trading systems? Can I purchase a robot and trade with it? Should I purchase a bot and trade with it? Or I've lost money trading with a bot? Or a bot was making money, then all of a sudden lost money. So what is our opinion, or what do we think about trading robots and automated systems, especially in the retail sector? So I think that will deal a lot with about machine learning, artificial intelligence, big data, quantitative ways of looking at markets. And we have some strong opinions on some of these topics because we've done some research, looked at a couple of these bots and examined how they work, and we'll try and share with you some insights. So just like we say in every podcast that we shoot, this is more of an exercise in thinking. So what we are going to lay out is a template that you can use as you're thinking about some of these things, the pros, the cons, the risks, and some of the rewards that are contained in using automated trading systems or using trading robots. So none of us is an expert at using automated systems or creating automated systems, but personally I hold some friends who are very deep into coding and they're very focused on understanding machine learning and artificial intelligence. We've done some meetings with them, we've described to them some of the things we're doing. I've also had the chance to listen and talk to some of the people who are busy developing trading systems, and I've also interacted with traders who bought systems and robots and talked to them about how the robot is trading, the risk rewards and such things. So those are the things we're going to talk about in today's episode 14. But before we start market update, I think it's important for us to first look at the market update. If I just start with the crypto world today, I think that's more interesting for this week. Bitcoin back to 45,000, coming back from at about 30,000 over the last 3 or 4 weeks. Ripple trading at $1. I think that could be easily seen on the charts. Ethereum back to 3,130 after the Ethereum upgrade that took place last week. So last week we had an upgrade called EIP 1559 on Ethereum. If you want, you can do more research on that. You'll understand why Ethereum is one of the best crypto technologies and what the upgrade means on Ethereum and some of the technologies that the Ethereum team is working on. Litecoin back to 170. EOS trading at 4.78. Doge to 0.27. Cardano 1.81. DOT 21.2. ICP 65. XLM 0.33, Dash 180.9, and I think Serum trading at 4.823. I think the biggest move for this week has been Ripple. Yesterday we jumped about 14% to trade at $1.
14?
Yep.
About, okay, it reached about high about 27%. Then it closed at 18%.
At 18%, yeah. So I was the highest point reached was
1.03 or something.
Okay, yeah, because I left it at 97, 98, and it was about 14% jump by then. So I think I never saw the move that you're talking about, but I've seen it on the charts. Yeah. Anyway, your week, how's your week been? By the way, my name's Akian. I'm sure I've done this on the opposite side. My name's Akian. I'm the founder, Financial Hub. I first introduced the topic, what we'll be talking about, the market update. Now I'm introducing myself. I'm joined by my colleague Lawi. He can introduce himself and share with us how his week has been so far.
Okay, greetings traders, listeners from all the platforms, YouTube, Spotify, all the other platforms. We always appreciate your time, you listening to our podcast. Today, as Ken has said, okay, my name is Taras Lawi, risk manager at Financial Hub. So if you're struggling with risk management, you can you can find time to find me in the office and we'll talk for a few minutes and maybe share some nuggets. So today we're going to talk about a very interesting topic. It's not a mainstream topic out here. Most people don't know where to go to look for data about trading systems, because actually I don't know many people who have been successful here in Kenya making money through trading systems, trading robots. So I don't have a lot of success stories in that sector, but I have a lot of success stories in trading discretionary, whereby it's not automated. It's you making your own decisions as a human. So trading algorithmic trading or quantitative trading is basically like the use of sophisticated computers to crunch data, analyze the data of financial markets, and come up with patterns that you can patterns that can be repeatable, and you can profit from them from time to time. So also I believe quantitative trading only makes sense also in institutional level, mostly because of the amount of capital it needs to set up such a fund. Setting up a quantitative fund is expensive. You need to hire developers. We know computational manpower is expensive. Hiring developers, setting up very powerful computers, having very powerful servers. So I think that's one limitation that makes us retailers not go into that frontier. So today we'll talk about the disadvantages of algorithmic trading, the advantages. We will talk about this man, Jim Simons. He's the greatest quantitative trader. Actually, is the greatest trader of all times. He's been he's been named that he's the man who solved the market. So many people say you can't solve the market, but ideally this man has sort of solved the market, trading for over 40 years with algorithmic trading and being consistent every year. I think he only had one down year, which was down not because of the fund was down, but because of fees. So he was about 2-3% up, but from fees it went to negative side. So he's one of the greatest traders. He purely uses mathematical models to find data from markets and profit from them. So he'll be also one of the spotlights, because I think he's the pioneer of algorithmic trading. And from his returns, he's managed to beat like one of the greatest traders, Warren Buffett, Ray Dalio, Peter Lynch, all those great traders. So I also believe algorithmic trading is sort of powerful if you can get to harness it well and form solid models that can be adaptive also. So I think that's one reason I believe algorithmic trading is powerful. So we'll also look at the disadvantages mostly on the retail sector, why most people fall victims of robots and buying robots that don't work or robots that fail after working for some time, as Ken said. So that will be the topic for today. So personally, my trading week has been a bit slow. The markets I'm watching, most of them are not moving from my point of entry. I'm having GJ and US 500 shots. So I'm just watching them for the week. It's about the end of the week. So I think if it doesn't play out within this week, maybe it will be a long swing trade. So that's my trades for the week. Ken, which trades did you have?
For this week, I have longs on FTSE 100, worked out very, very well. Currently, I'm long on NASDAQ. I was also looking at the Dow long positions. So the Dow is also created new highs never seen in the history of the stock market, trading at 35,500. And I also have some shots on Euro yen. So I think those are the main trades I'm watching. But for now, I'm out of the FTSE 100 long, go to my target. Now I'm watching the NASDAQ long that I'm talking about, and the Euro yen short that I talked about earlier also. So to start off, I think it's important for us to first look at robots. I think robots are one of the things that many retailers fall prone to before we even go into the big topic of algorithmic investing, quantitative investing, and mathematics and such things that are highly involved in machine learning and such things. So most robots, if we look at robots, how they are created, most of them are created based on technical indicators, and they're called expert advisors. Yeah. So what they basically do is, for example, I have developed or I have coded a system that will buy any time the markets bounces off the 16-day moving average or the 20-day moving average, or any time the markets hit a certain maybe indicator, the markets will buy or sell, and will buy a certain lot and sell a certain lot. We'll set a target in this way. And most times these things are not based on how the markets are playing out. They're based on the past. So that's why I think it's important for me to start. That's my first point. Mark Twain said it well, history does not repeat itself, but it rhymes. And I think a big part of trading is pattern recognition. It's being able to look at patterns which have played out in the past, and they keep on playing out and being able to capitalize on them. However, there is a risk in that. in that markets don't always play out as you expect. For example, the last crisis that we had, or the last recession that we had, was caused by COVID-19. So if you had developed a system that was predicting recessions based on probably interest rate moves, which normally start off the topple to the downside, then it was very hard for you to spot or for you to get that correction to the downside and capitalize on it on the right way. And often markets will have tail risks. They are called tail risks that you can't quantify. You have to wait for them to play out for you to be aware that they exist. For example, the 9/11 crash that we had, for example, the corona crisis we had, the SARS crisis that we had, the Spanish flu. Those are tail risks. They're not risks or black swan risks, I think. Black swan is the right word. They're not risks that you can quantify. You can't just sit down and expect COVID will come at this time and it will affect markets in this way. Those are things that you have to think about if you're a discretionary trader. So that's one of the downsides of using expert advisors. I think most of them don't factor in the black swan risks. And once you're trading a system which does not factor in such risks, there's a very high chance that by the end of the day, you'll blow up. As a trader, I think the first thing that you should be concerned about from a risk perspective is survival. I think that's the most important thing. And if you're trading on a long-term perspective, if you're trading for 10, 15, 20, 30 years, you really have to think hard about handling black swan risks, which will come about from time to time. And you can't predict them, you can only prepare. So from a quantitative perspective, I think that's one of the things that I think that's a downside for it. There's a high chance that if you're trading a system that has not factored in such risks, then you'll blow up before things are ready for you to take off. Yeah. Another flip side that I can talk about, which I've observed from most of these systems, is the position sizing strategy that they use. So I've interacted with someone who came to the office and had a bot, and the bot would buy anytime the markets would move lower, it will buy expecting a move higher of about 20 pips, and it will keep on doubling the position anytime the markets moved lower and it didn't work. So for example, if the trade was moving, if it bought expecting the markets to move higher and the markets went lower, now the next time it was buying, it would buy at double the size it had bought initially.
So it's a martingale system.
Exactly. Then the next time it went lower, it would double and double and double. The danger in that, and that's how I think he blew up the account, because eventually he blew up the account, was when the markets are trending strongly. And I think that time markets were really trending strongly. I think if you're trading, for example, a market like gold, which often can get some momentum and move in one direction for a very, very long time, it's very, very difficult for you to make money using a robot that buys anytime the market moves down a certain number of points. Because, for example, if gold breaks out and moves 200 points and you buy it, could move down even 1,000 points without having any move to the upside. And if you keep on doubling your position, I think you're doubling your risk in a losing period.
Yeah, like this week on Monday when gold opened and it dropped 800 points in 15 minutes.
That's the thing.
Yeah, and it's not a gap. Like I was awake. It was around 1 a.m. in the morning.
Yeah,
gold just started tumbling. Now imagine you're trading a robot
that buys.
You are asleep.
Exactly.
The bot works 24/7. If you sleep, the bot is working.
Yeah.
Bot gets that gold trade. 1750 the first buy. 1740
another
double buy. 1730 triple buy.
Exactly.
That market went 800 points.
All the way to
I'm so sure. Yeah, if any person was using such a system, such a martingale system on a very volatile market like gold, most likely you'll crash so fast.
Exactly.
Yeah. Continue.
So that's one of the downsides I think that exists in using some of these robots. The upside, I think one of the upside that I'll talk about is these things are very, very good at crunching data and giving you signals where opportunities exist.
Yeah.
As I'm trading, it's very hard for me to process information on more than 10 markets at best. I think when I'm
even 5 at a time.
Exactly. When I'm at my best, I'm not focused on many things. I think I can trade up to 6-7 markets comfortably and crunch the data and understand the levels and understand many things.
Yeah.
But a robot can do that over 30, 40, 50 markets and give you signals.
Yeah.
So I think the best thing that one would advise people is, one, buy a bot which will give you signals, and then from the signals you can make the decisions when to trade.
Yeah.
You get? So for example, if I've just said that once A, B, C, D happens, give me a signal to buy a certain asset. It gives me a signal. I have to confirm, with my own mind that this market has attained the criteria that the bot has sent, and it's now time for me to buy. Unfortunately, most of these bots are so short-term oriented. So they buy 10, 15 pips, and before you check the markets...
10 is a lot. Like, bots work on 3 to 5 pips.
Exactly. Once you check the markets, you're gone before anything happens. And I think that's the downside of again, using bots. So that's why it's very hard for you to make money using bots.
Yeah, true. That's true.
Yeah.
For me, I think where the first point where people go wrong is like trying to buy a bot.
Not developing your own.
Not developing your own. See, bots, markets are dynamic. Markets change.
Thank you.
This like trading pound, I'm so sure trading pound before Brexit and after Brexit were very different things.
Yep.
Volatility, momentum, directions were very different. I think if you really want to go into that side of quantitative trading, robots, you need to have your own system first.
And you need to develop it.
Yeah, like you've developed your own human system. Like it works on you as a human.
Yeah.
Then like the main reason actually most people go to algorithmic trading is to try and minimize the emotional factors of trading.
Yeah.
Like umekubali shit in an overwhelm mentally. So let me give this machine which doesn't have a lot of emotion, actually which doesn't have emotions to play out the setups I was to play out. You see?
Yeah.
If I was to enter, let's say a gold trade long, the market moves, let's say 30 pips.
Yeah. And
let's say I'm not very, very strong mentally to my side. I can easily cut that trade and bank that profit.
Yeah.
Okay, maybe I was to make about $100 on that trade, but I made $30, you see. If that trade was really right, and not my human emotions telling me, Taras, this trade might easily turn against you, cut that $30 profit, that bot would have gone to 100%, right?
Yeah.
So like most people actually go to algorithmic trading because they believe they can't handle the emotions of trading. So they try and give the machine that job to like minimize that factor. So number one, it's good if you've decided that path of mentally stuff inakuchenga. So you try and first develop that system. You have a good system, but your problem is psychology, you see. So you can develop that system, it's making money here and there, but you have maybe fear problem, FOMO problem. Such problems are psychologically greed, overconfidence. A machine can never get overconfident after a series of 10 wins.
Yeah.
But it's so easy for you to get overconfidence after a series of 10 wins. So
yeah,
that disparity of human emotions and computers, I think, is what makes algorithmic trading at least more valuable. So, but the problem is, you want to buy a bot which you've not developed. So for me, I need to know the criteria of which this bot is working.
Yeah.
What is it buying exactly? What is it developed from? For me, I trade using a certain tool. Is it developed from pivot points, maybe from moving averages, from Fibonacci? Let's say anytime a market moves, retraces 68.1, it sells. You see, like you need to know how you're putting that system, because I will also need to tweak it as market changes.
Yeah.
Volatility change, I'll need to tweak it, some codes for that machine. But let's say I've bought that machine. And most times, actually, may think this is sort of a fraud business, because these bots, may believe first, if I can create a money-making machine like Jim Simons, it will be very, very secretive and confidential. And
I wouldn't share it.
I wouldn't share. At one line of code, siwezi kupea. You see, so because it's my money-making machine.
Yeah.
Now, I always wonder,
why would you keep it that secret?
Why I'd keep the code secret? Because it's my own system, and it's my own system. It has proved to make money in markets. It's making me money. If I want to sell it, like, why sell something? At the moment, the point of selling something is to get money, right?
Yeah.
If this machine is making me money, why would I even think of selling it to someone?
Okay.
Yeah, exactly. So if it's making me money, it'll be just for me and maybe for the firm I'm working at.
Okay.
And even if you look at Jim Simons, his fund is closed to outside investors.
Yeah.
It's only friends and family and employees.
Yeah.
So like the program is very, very confidential. Like everything about like around the makeup of the system is very confidential. These other systems which are being paraded outside here, they are $10 systems, $15 robots, $30 robots. You're buying a $30 robot, which is not even like, it's full automated. Not even a signal, something giving you a signal. Fully automated. Taking very, very many trades in a martingale system.
Yeah.
So, like as you buy a bot, you don't know it's using martingale system.
Okay.
You've just seen results from someone saying he's using this bot, he's made this amount of money. And now you're convinced if you do the same, you buy the same bot from the person maybe you had the story from, you'll make the same amount of money. For me, I believe robots cannot be sold. Like you need to develop it yourself. You don't need to be that programmer, but you can sit side by side with the programmer.
Mm-hmm.
Tell him or her, this is how I trade. This is how I want you to develop this model. This is the amount of data we want to crunch for, let's say, the past 100 years, and see if this pattern.
First of all, most people don't even have access to that
exactly
amount of data.
That amount of data. So I was saying, like, from a retail point of view, we have very many disadvantages of going into algorithmic trading. Yeah. But from a professional point of view, from institutional levels, you can hire the best developers. Me, even today, if I want to automate my system, I don't have more than 5 million to hire a developer.
Yeah.
See, like if I have it, I'll rather just trade it than hire a developer. You see, I've not reached that point yet. But also, like the fact that most bots, as you've said, they don't factor in the changes in markets. You see,
yeah.
Let's say I bought a system last year before COVID. After COVID, your system, I'm so sure inge work.
Yeah,
because things were very, very
volatile.
Volatile. Market's direction changed up down in less than a month. Markets went down 38%,
then
came up
again.
more than 50%. You see, so like that change of environment needs you to first like stop this bot, like reprogram it to the now current market environment now, and then now let it continue playing the data.
Yeah.
But most people, they don't take that time to tweak the bot to suit the market environments. So I think that factor that your bot is not so dynamic as the markets will make you not will make retail traders not make so much money in through trading robots. Yeah. So I believe like for you to trade robots, you need to have like actively developers working on it day in, day out, not just something you buy and forget. You see, like buy and forget, make money, deposit and forget. That's like, you can't cheat success.
Trading doesn't work.
It doesn't work like that. Yeah.
So I think to build on your point about markets being dynamic, I think it's important to look at the works of George Soros. So I think Soros was a very, very good trader. He was among one of the best traders we've ever seen. The pioneers of the hedge fund world. I think these were the people who built the idea that you could build a hedge fund, raise money, and trade for people. And he came up with a very good theory called the theory of reflexivity. And the idea is market participants will affect markets and markets will affect the market participants. So it's a reflexive relationship. So our behavior, how we behave towards markets, will make markets zig and zag in certain ways. And how markets are zigging and zagging will affect how we behave. It's a reflexive relationship. Yeah. So I think it's very hard, first of all, for anyone to build a bot that can be able to trade and not be dynamic, just like you said. In that, if we all built bots which were working, the fact that they are all working would make them stop working because the advantage would be lost. Yeah, true. You get? Yeah. And that's why I feel like if you develop a bot that is working, no one sells it. It's because of the fact that the more people use it, the higher the chance it won't work anymore. Because there's more people start trading in a particular way, then the edge is lost in that way. Kabisa. So that's one of the things that I think people need to be aware of when you're trading. Yeah, true. Your only advantage needs to be what other people are not really doing. Once you're behaving like everyone else in the markets, it's very hard for you to make money. You get? So that's the first thing. As you buy a bot, remember that if this bot is working, and this person has sold it to many people, the fact that it's already working and many people are using it will make it stop working. Yeah, and I think that's why actually most of these bots, they work for a few months, 1-2 months, then they break down.
breakdown. Like you can't. Like, that's what I'm saying. It needs to be developed day in, day out.
Yeah.
Like lazima move na markets. Like you every day as you wake
up.
And
the game of markets, just like you said, in trading and investing is a dynamic and a complex game.
Kabisa.
I don't think it's a game
the amount of data in this industry is a lot, man.
Yeah.
Like more than 200 years of trading, bana, is a
lot has happened, yeah. So you can't just simplify it to a simple formula. Anytime you imagine that trading is a simple formula, just know that you're lying to yourself.
Yeah, true. Because that formula tomorrow will have changed. Markets change every day.
Every day.
Yeah.
So you need to keep on updating your formula. And that's why I think also the best traders are quite adaptable. They're not people who are too rigid. They're people who are open and always trying to learn new things and change their ways of thinking and looking at things. Because markets are dynamic. They keep on changing. For you to perform well over a period of 30-40 years, you really have to find a way to behave in a very different way and in many different circumstances.
True.
And you have to think that before other people realize it.
Yeah.
For example, when COVID happened, you have to be smart enough to know that the Feds will pump in money, and once they pump in money, the markets will go up. But if you waited for the Feds to pump money for you to buy, you were too late. Markets had already started going up. So those are some of the things that many people, unfortunately, in the retail scene don't think about. So they imagine that trading, you can boil it down to a simple formula which will work for the rest of your life. And it doesn't work that way. True. I think also it's right for us to say in this podcast that trading is not for everyone.
Yeah, true. Trading is not for everyone.
Yeah, so one, I don't think you should try to do trading as a part-time job. I think that's one recipe for failure. Like you decide,
yeah, exactly,
you'll be doing trading.
Let me buy this bot. It will be trading
for
me.
Trading
as I sell my hardware.
Side hustle yangu. It's one of the worst side hustles you can have. Yeah, it will consume you a lot.
It will consume the money from your main hustle.
Exactly. If you want to invest with a long-term time frame, buy an index fund. I think there are very many people who are smart enough to suggest that buying an index fund, which is more like buying a market, is better than trying to beat the market.
Yeah, true.
And if you're not really involved in the day-to-day decision making of markets, I think holding an index fund is one of the best ways for you to capitalize on the returns of the stock market.
True.
If you want to be active in the markets, remember there's no simple formula. You have to be on your job 24/7, and you have to craft a way of making money in different market environments.
True.
So that's one of the things that you have to realize when you're thinking about buying a bot.
True.
Yeah. You the fact that you're lying to yourself that you'll cheat the process of trading won't work.
Yeah.
Another thing is, we can go back now to risk management. Most of these bots don't think about risk management.
As you said, first, a system that has a martingale system.
Exactly.
Is a negative system.
It's a negative system. Wise. Exactly. Because there are periods where markets will move to one direction extremely. And this comes out of panic, fear, greed. Such things cannot be quantified. I don't think you can quantify the level of greed that someone has.
Yeah.
Kwa market greed imefika hapa 70%. You can't quantify such things.
Yeah.
So as much as you can quantify other things, there are things you can't quantify. And some of those things are the reasons why some of these sports won't work.
True.
You get. So let's say you have designed and first of all, most of you don't even design those systems. So if you're not the one to design the system, don't even think about that as an avenue. Think about pursuing other avenues. 1, invest in an index fund. 2, give your money to a money manager. 3, stay away from markets or learn how to do it yourself. Those are the 3 options you have. If you don't think how you can fit into any one of those 3, avoid markets. Just avoid it. Think about other businesses that you can do besides markets. But if you have chosen, let's say, the first option, which is to design your system, then don't think about only the market direction. I think that's where you go wrong also for most people who design these puts. You really have to think about your hit rate. You really have to think about your risk-reward ratio. You really have to think about your position sizing strategy.
True. And most bots actually don't have all those.
Exactly.
Most bots try and take advantage of inefficiency in markets.
Yeah.
A small spike
imechukua
haina risk reward, haina kitu yoyote.
Exactly.
3-4 pips, where is the risk reward?
Hakunanga hiyo. Risk reward
hakuna risk reward.
So the fact that you're not paying attention to the most important factors of
in trading, position sizing.
Because position sizing is all about, I have $10,000. How do I trade for me to ensure I have my $10,000, make something, and in the worst case possible, I still survive to trade in the markets. The fact that you're not thinking hard about that question is what is making you screw it up when you're trading. So for those who are designing now the bots, I think one advice for you is think about the risk reward more than you think about the market direction. There's nothing. One man said there are two classes of forecasters: those who don't know and those who don't know they don't know. So some of you are really, really invested in trying to forecast where the markets are going. And I think the right thing for you to do is you can't predict, you can only prepare.
True.
Preparing means thinking about how you'll manage risk, how much
where
position,
come out, where
exactly,
come in.
where you'll come in, exposure, how much is exposed in your account. The fact that you're not thinking hard about these things when you're developing your bot is where you start going wrong.
True.
Yep. And just like you said, I think you said a very important point, which I think is something that I don't think you can really do.
Mm-hmm.
As much as you have a bot that is trading for you, you're still emotionally invested in how that bot is performing.
Yeah, true.
So either way, you're still invested in the markets emotionally.
True.
There's no way you can avoid that.
You just try to like reduce the strength of your emotions.
Exactly. So I think the best thing for you to do is to develop a systematic way of generating trade signals, not a systematic way of trading. In that, the decision of how much to risk and what percentage of your account is exposed, how many signals to take at a time, those still remain with you.
Yeah.
But the signals can be generated using your bot.
Yeah, true.
Because it will crunch data faster, it will break down markets faster, and
I
it
think
will get signals faster.
That is the fact that I think we should have talked that about first. Like there are two forms of automated systems, like full automation and mixed.
And mixed, yeah, that's true. And I think most people who are doing very well, if you follow up, it's a mix.
Yeah, it's a mixed system.
It's a mixed system. I think
like the system, like the algo gives you maybe alerts on like setups.
Yeah.
The setups you're always looking for, like the crunch. Let's say, if you like, because as you said, like computers can crunch 1,000 markets in 1 minute.
Yeah.
And like kuna signal Nasdaq, kuna signal DAX, kuna signal Japan markets, kuna signal in Euro USD. So let's say you've formed a system that, let's say, gives you an alert that whenever the markets, the moving averages, maybe 9 and 20 cross, maybe you'll be buying. Yeah. Maybe when they cross to the downside, maybe you'll be selling. So it'll be showing you those alerts, like these moving averages have crossed. Yeah. Watch this market. Yeah. So you go to watch that market. Now you see if the market is fitting your criteria of what you've told the bot. Now it boils down to now the things you're saying: exposure control, risk reward, where you'll enter, where you'll come out, position sizing. Now that's up to you. Exactly. And also if you enter that market or choose not to enter. Yeah. So, but most systems that, as you said, people don't want that work again. They want full automation. And that can't work. Actually, yeah, because there was this company in the US. I was working for it. So like they have a program for full automation. Yeah. And the moment that bot is not working, people are crying. Like, you said it's full automation. I'm busy. No. It needs to be full I don't need to close the trades manually. If it's like that, I need to opt out of the system. See? Okay. So like people don't want to invest any little time into markets, and those but they want the most rewards. Make money in the long run. Yeah, so like traders or speculators, and that's why I think there's a very high failure rate in the markets. Yeah, true. Because there are very many people who are pursuing it in the wrong way. In the wrong way, yeah. Like I understand the amount of effort it needs to first develop a manual system. Yeah, and then you can automate it. Then also the amount of effort it needs to automate that system. Hey, you need powerful computers. Yep. But C2 and EA. From reading this book, these guys, bro, are crunching data. Hundreds of years of data. Machine learning, like you put this stuff to like unai stress test for 100 years. Unaangalia easy moving averages. Yep. Have they, like how have they been changing in different markets? Let's say the First World War, the First Great Depression, Second World War, how are the markets performing? Like the system is very, very sophisticated. It's a skill on its own. Sophisticated system, like naona kusho kitu huwezi uza bro. Again says vitu zinauzwa ni vitu, yani msee amecode overnight kwa nyumba yake. A system that buys when moving averages cross. Such a system. Also, and another disadvantage is full automation doesn't give you control to avoid fundamental risks. So let's say, like interest rates are being released at this time.
Yep.
As a dictionary trader, I'll just say, hey, from let's say 2 hours before and after,
I won't be trading.
I won't be trading until that news passes. So, but for a machine, if it's technical based, it doesn't even know there's Jerome Powell talking. So unapata sasa imeanza kubaya sasa ile kwanza sasa ile ya martingale. Kumbe ilikuwa tu a spike sasa. So it buys now start going against you.
Yeah.
It's very very like I think the best way to actually approach algorithmic trading is when you're doing it mixed.
Yeah, when it gives you,
and also Gitosh is doing it mixed because it gives him signals, then he takes the I take the signals. And if you remember, he told us he invested about $50,000.
It's about 5 million.
5 million shillings.
Just
building a bot.
Yeah.
But go to the market, Google up with trading bot size.
$500.
$30.
Kienda sana ni $1,500.
Kienda sana ni $1,500. Sasa huyo jamaa bado anataka kugonga sasa ile serious.
Yep. Ila $1,500 iko fully automated. So I don't think such things can work. And if you also want to understand why some of these things can't work, you have to think about some of the periods whereby markets are no longer efficient, or whereby the best opportunities, I think, exist when markets get out of equilibrium. For example, when oil went to zero last year.
Yeah.
I want to think about a system that was developed to buy when oil is going down. Which system surely will have bought?
No.
None.
Yeah, true.
Right? And most of them which bought will have lost money because it would think at 20 things overvalued, at undervalued, at 10 undervalued, but this thing went all the way to zero.
Negative 34.
Yep. So you really have to think hard about the best opportunities in the markets exist when things are out of equilibrium.
Yeah. When there is some inefficiency.
That's the right word. So once there's an inefficiency, your bot is bound to work only in an efficient market.
Yeah.
And the efficient market is one which does not exist. From time to time, we will have periods of inefficiency.
True.
And those are the best periods of trading.
Kabisa.
And your bot is not working in the best periods of trading.
It was actually working when things were bad. When it should now be working well. Ishamaliza pesa.
So it's very hard for you to quantify some of these things. Once you understand some of those things, you really have to. Because like what Mark says, in the markets, what you don't expect to happen will happen because many people don't expect it to happen.
Yeah, true.
The fact that many people don't expect it to happen
is what makes it actually happen.
Yeah,
true.
You get, because it's not expected. So once you're trading based on past data, you should remember that your past data is only showing you what has happened.
Yeah.
What is likely to happen. And the fact that history can predict the future, can help us at least have the odds on our side on the future.
Yeah, true.
Does not mean we'll always be right.
Yeah. And the fact that something not having have happened does not mean it can't happen.
Exactly.
Yeah, true. Like, to make the same example on oil, like it had never happened.
But it happened.
So, like for systems which were based on like oil cannot go below 10, cannot go below 5.
All of them were out.
You see, so yeah, like in markets, who says that the markets can stay irrational longer than you can stay solvent?
John Maynard Keynes.
Yeah, John Maynard Keynes. Like easy markets, my friend, they can go to irrational points for longer than you can stay solvent. Like your account will have gone and the markets are still irrational. And the moment they come back into efficiency, you don't have your capital.
Yep.
And that's how markets are structured.
Yeah.
To trap people on the wrong side, fool most people most of the time. Yeah. Trap most people to the wrong side. Then to the few people, sophisticated investors,
they move them to the other side.
They move the market to where they want the market to go.
Yeah.
So I think markets are tricky to, like markets are hard generally. So someone should not lie to you that technical, but to analyze markets. Buy bot. It will solve problems. It doesn't work like that. Yeah. Like markets are tricky generally. So you need to just accept it. And from the fact that you've accepted it, you won't like easily be duped into buying such bots. Actually, you'll be more inclined to developing your system, being patient, raising capital for yourself. Maybe 5-10 years after you've built your capital, you can now sit side by side with a programmer. Maybe form a whole quant fund side on your company. Because for me also, I believe it's a very, very first, as we go into more technological advancements, like more data, machine learning becoming more sophisticated, artificial intelligence becoming more acceptable and being more practical, I think markets will become more liquid. The fact that actually, I think even now, most liquidity comes from robots. Actually, algorithmic trading, like 60% of the liquidity. Actually, most of these banks, they use
machines.
Machines.
But I think one difference between the banks and the retail sector is what you said. The banks have people there who are ready and very, very ready to keep on changing these things as the markets are developing. So the boat is not really rigid, it's dynamic.
It's dynamic, yes, dynamic,
changing market conditions. Because, for example, think about the documentary we were watching, the DeepMind story. So DeepMind is a company. DeepMind is a company that is focused on
solving problems through machine learning and
artificial intelligence. So it's a company focused on artificial intelligence. So I remember the AlphaGo.
The
Go game. So Go is a very complex game.
Yeah.
And the machine actually had a challenge with one of the best.
And Go, like, I think it has, I think, more than 1.3 million
or
billion outcomes, moves,
that you can make.
Yeah.
The fact that a human can't have all these moves in their head meant the machine would beat them.
Yeah,
because the machine could crunch all these patterns, understand the pattern recognition, and you could see the machine bringing out some very beautiful moves that had never been seen before in the
also,
game.
Also, on data, machines are good at storing data.
Yeah.
Humans, we are not.
We're poor. Very poor.
Like, you can read the chapter on this book. Like, you're trying to recall, like, let's say even a movie.
You have shortcuts to decision making.
Yeah, actually, and your mind can process more than, like, I think 10 information at a time.
Yeah.
7 actually, from psychologists. 7 is maximum.
Yeah.
And actually, saizi to engage to place, 7 people tell you their names. I'm called John, then repeat the names. Nishasahau kawa nne hivi. Exactly, but machines, they always remember. You see, if you like haitaisahau ati it will always remember unless it's hacked or something.
Yeah.
But for us humans, we are on hackers. Una hack mind yako. Like, you can't store data for long. Yeah. Also, that's I think one human
limitation.
A limitation.
But you could see the scientists, and these were people who had taken time to understand computers, to understand psychology.
Data scientists.
Exactly. Yeah. Data scientists, psychologists, machine learning experts, like people with PhDs.
Yeah.
Developing a system to compete with someone.
This guy was only hiring people with PhDs. If you don't have a PhD, kwanza uwako huko. Kama kuna 18 PhDs in the firm.
Exactly. So you can see the level of complexity that is needed for you to solve some of these problems.
Yeah.
If you think you can solve and simplify some of these problems to hiring a programmer mwenye amekaa mahali uko solo hata hajui kutrade
kwa financial markets
that's a very, very, very hard task that you're giving yourself, and I don't think it's a very, very easy thing for you to do.
Yeah.
So it's very hard, I think, with time, and my bet is these things will either happen in China or in the US. It's hard for them to take place in any other country. I think actually if you just look at resources, technological advancement, exposure, the level of skill required to do some of these things, all of these things point to just the US having or China. I think those two countries are well developed technologically for them to develop such a system or systems that can work in
such random markets.
Exactly. But any other person, especially a Kenyan, amejificha mahali. And we've seen some people selling bots.
Yeah.
And I've always wondered, the people who buy bots don't think hard about, why is this person selling bots? If they're really making a lot of money from bots, why will they sell it to you?
Yeah, exactly. Very fish.
It's just that you have not thought hard about why you're doing some things. If you sit down and think hard about why you're doing some things, it's not right for you to actually pursue.
The law of irrationality. Irrational decision making. How did you come up with this decision?
Exactly.
I just saw that guy making money.
Then I decided to buy it for fear of missing out.
Yeah, true.
Unconsciously you make most of your decisions without knowing that you're making.
Like you make most of the decisions unconsciously.
Exactly.
Ujuangi umefanya nini
hata nini ilikuinfluence ufanya hivyo. So that's the bad thing about it. But anyway, as we sum up some of these things, I think it's also important to talk about the role of some of these things and where people can find more information. Yeah, one, I think if you check out the DeepMind guy we talked about, he's called Demis Hassabis. You can learn a lot about artificial intelligence and machine learning from just listening to some of the ideas that they use. Because you could see he developed several systems which learned how to, and the games was a perfect
started
arena.
with chess first, then it went to go, right?
No, it started with that ping pong.
Oh
game.
yeah, the ping pong. Yeah.
So it would
true,
learn
true.
how to maneuver, then it went through learning different stages until it got to a level where it was an expert. Finally, now it
like
could.
as it started, it failed,
Exactly.
then started improving.
Exactly.
Yeah, like machine learning.
Learning.
True,
So it was learning how to, just like you learn how to do something, you could see, and that's why I think if you understand even how those machines work and how they learn, you'll understand even how your brain works. At first, you really have to start at something doing it poorly.
Oh, very work.
You have to be very, very bad at doing something, then you learn how to do it, and then you advance, and then you become an expert at it.
True.
The machine followed the same process. The only difference was it was doing it very, very fast. In a matter of hours, it would move from one stage to another and one stage. So in a matter of days, it could be an expert learning a simple game like that. So you can check out that guy. I think there's a lot that he has, and he has the right information. He has a PhD in neuroscience, a PhD in computer science.
The guy has learned so much.
Also amesoma yani ile si kidogo. So you can check out that one. I think you can also check out Jim Simons.
Yeah, the Jim Simon. This book, you can find it at Prestige Bookshop.
Yeah.
It's about 2,000.
And you can learn a lot from it.
A lot from it.
I think you can also check out Ridalio. Ridalio is also a big believer in systematic decision making, coding everything into your computer. But he believes you need to combine that with
discretionary decision making.
So you need to combine that with the human element in decision making. I think you can check out people like Peter Thiel. I think Peter Thiel is also quite influential in the data. Yeah, you can check out. But some of these people, as much as you're telling you to check them out, I think you can learn a lot from Peter Thiel. He talks a lot about artificial intelligence and the future of such things. But some people like Ed Sikota don't talk a lot about how they develop their systems.
Very,
Unfortunately, they don't talk a lot. They don't expose a lot about artificial intelligence and systems and such things. You can also look at DataCamp. I think DataCamp is you can check out DataCamp. It's more of an institution that is focused on teaching people to do things like machine learning, artificial intelligence, coding, Python, such things. So from checking out such platforms, you can be able to understand a lot about how those things work and how they influence the markets. So you can also check out DataCamp.
There's also that YouTube documentary.
The one for
high frequency trading.
Yeah. And that guy has actually written a book called The Quant Revolution.
Revolution.
The professor from, I think it was a professor from MIT or something who later joined Goldman Sachs. The documentary was called Flash Crash or what?
No. It was called
High Frequency Trading. And the guy who had Kipara was called? That is also someone you should watch out for.
Yeah, true.
I can't remember the name also. But there's one guy. I can't remember the name. But that guy is also helpful for you to understand that. You can watch that documentary. You can watch the one.
I think we can put links on.
Yeah, we'll try and put links below for you to be able to check out some of these things that you've mentioned. And you can learn a lot from some of these people. Just following them, understanding their way of thinking about markets, their way of thinking. I think for the first time in history, you can be able to plug in to different places. Like you can plug into Silicon Valley.
True.
Plug into maybe Shenzhen and other places. And you can follow what's happening there. Okay, you won't have the first-hand experience of experiencing these things, but at least you'll understand there's some technological revolutions happening from place to place and how they're going to impact different things. So you can at least appreciate the value of the internet when it comes to such things.
Yeah. Also, I wanted us to also talk about, like, do you think now there's a future for not this robot selling business in Kenya, in Africa, like quant trading, sophisticated here in Kenya, South Africa? Actually, I believe in that so much because
that's the future.
From reading this book, this guy learned this stuff in 1972. See,
that was way back. Like, there's a line. Let me try and find it. It's saying that this guy started using computers way before Mark Zuckerberg was even in nursery school. So so for me, okay, maybe I won't find it right now, but I believe there's a future in this business. Like, if people can change that mentality of buying robots, and I think with time people will.
Yeah, because for me, I believe is for people like us who are already running investment firms. So it will get to a point maybe we'll need to hire the best developers maybe in Kenya.
In town, yeah. And
So,
you'll need to hire people who are experts at
yeah,
artificial
and full-time.
intelligence, machine
Yeah,
learning,
true. Create a
Python,
quant fund.
and learn some. That is ultimately, I don't think actually when we're in the next 10, 20 years,
Yeah,
we'll be
true.
using discretionary trading
So
a
much,
lot.
yeah.
So I think eventually we'll have to
There's
lean
so
down
much
to the side
future
of the
in this.
computers.
Yeah.
So there's a lot of that, of value in that. And that's why I think people who are working on right now, developing, coding, machine learning, artificial intelligence, big data, those are some of the data science. Those are some of the most valuable people in the next 20
in the next 20, like, and in many industries, not just financial markets.
Exactly, in very, very many industries. Because if you understand, data is now the new oil.
Yeah, true.
What
Data is
runs
the new oil,
everything.
man.
The fact that you have to learn how to manipulate data, to understand data, to program data.
True.
And those are the skills I think you need to develop for you to use a trading system that is automated. If you don't have any of those skills, achana hiyo kitu kabisa. Stay away from it. Stay as far away as you can from it and just focus on doing other things. But if you're more interested in understanding the quantitative side of trading, then focus on things like machine learning, artificial intelligence, Python, I think, is one of the languages you should really, really understand in depth. Then now you can be able to know how to manipulate data and how to form systems that work and systems that are profitable. And I think you'll need some partners for you to understand markets, because I think you need different skills for some of these things. One, you need to understand Python deeply, and then you need to understand financial markets deeply.
Yeah, true. So I think that point goes to most of our friends who are in that computer sector. Like, there's a chance for you to participate in markets. Like the story of Jim Simons, it's very interesting. Like, when he was now dropping being a professor, even the dad was saying, I liked calling you my son the professor, not my son the businessman. So like, when he decided to quit teaching, he was a math professor. He actually made the best math department in the world.
He was teaching in which uni? MIT?
MIT was just doing like, it was not his main campus, just few courses there. But he was in, which campus was that? Can't remember the name well, but he was actually moving in so many campuses. That guy was like volatile. He was not sitting one place. He actually worked in the defense department. That's where he started his trading career. Like, ilianza kumbokwa huko kwa military, just code breaking. He was a code breaker, breaking codes from Russia during the wars. So like, he had like he wanted to advance from maths and just being a teacher to now like finding another challenge. Like, he felt like he had already
understood.
Like he had actually, he's the father of I think partial differential equations, PDE. He's formed some great math formula that are being used right now. So he felt like he had already achieved that success in maths. But now he knew, like, most people are saying like, you can't beat markets, you see. Then he was like, what is this I can't beat with my mathematical models? And I have a team of mathematicians here and there. He's worked with them, professors, the people at the defense, the fellow code breakers. So this point is to go to our the developers and people in the computer sector.
I think even engineers.
Engineers. Like, you can easily tweak like your main computer side, like, because this guy was a mathematician. That's the only thing he knew. He didn't know markets. Even the co-founder, Axbaum, he didn't know markets. So like, but like the moment he just saw charts, Simon told his friend, hapa kuna patterns. Can't you see patterns here?
And that's what you're going to capitalize on.
That's what you're going to capitalize on. He says, if we can find patterns consistently, we can make money. In the 1976 uko 72. If you can find patterns here, then we can use mathematical models to be profitable. That guy was still ajui markets, but he was still skeptical, but akaamua tu kuingia. Then this guys even raised money without even testing like that shit for too long. It wasn't even a year, and they raised about $10 million.
They started
the fund. So there was this trade. I think
the gold trade.
Not gold. It was pound. At that time, Margaret Thatcher Thatcher was, I think was doing something for the pound, like I think lowering rates or something. Then that's when like they made their first big move, from like $10 million to I think more than $100 billion. Yeah, so this to show you, like, yes, we know, like, most of our friends, like, they want to, like, just be like us. You see, like, for me also, like, I don't think there's a point I'd want to maybe just understand, but I wouldn't want to be a professional at artificial intelligence, machine learning. I'm good at trading, so I need someone else who's good at machine learning to work together. So there's a chance, there's a future. I think, I personally believe there's a very, very big future in algorithmic trading, and for that is to also, like, for those listeners who are doing such courses, engineering, big data, machine learning, like, you can easily maybe visit us at the office. We talk on, like, such topics, what you understand on machine learning, what you understand on big data. If you can start creating that culture of at least sharing knowledge on machine learning, because I also want to know that, you see, but not as my main job. But it will be very, very interesting to sit with developers to see if there's a future in at least trying to beat markets like James Simon. Because I believe if this guy did it in the 70s, 80s, 90s consistently until today, I think with more sophistication in computers, we shouldn't not be able to beat markets. Yeah. So I just think it's a fact of harnessing talent, basically. Like, use the talent well, the money will follow. Yeah. So if you can take algorithmic trading also as a career, I think it's very, very serious. Nowadays, actually, you can be in Kenya and be working for Renaissance just as a developer. So I think there's a very, very strong future for people in that sector.
It's also important for people to understand, like, I was listening to one podcast from one guy from the data camp, I think, institution, and he talked about hedge funds not hiring MBAs and PhDs in business anymore. They now hire machine learning experts and artificial learning experts and programming experts. So I think the reason I come back to the engineering field is because for me, it's amazing for someone to be in the engineering field and they don't understand computers and how to code and such things. If in some of these fields, you really have to think hard about the next 10 or 15 or 20 years. And if you think hard about those things, I think it's essential. It's vital for you to understand how to program computers and how to manipulate data and some of these things. Because from the engineering viewpoint, I don't think there's anything now that you can be able to do without using computers. There are very few tasks that I think you can be able to do without understanding computers and the future of computers. So if you're in some of these fields, computer science, engineering, programming is one of those fields. Again, try to look at machine learning, artificial intelligence. It's a big field, Python, understanding data. Then you can build it up slowly but surely. Then when you meet with traders like us, I'm sure because you wouldn't have the expertise that is needed from the financial market side, it's easier now for people like us to even work.
To merge their talents.
Exactly, and come up with something concrete, which I think is what is the future of markets also. So
yeah, true. And I think I'll be very, very happy to be among the pioneers of such programs in Africa.
Yeah.
Because as I said, like, US and China, like, those frontiers have been shining on us, man.
And I think it's also important for us to understand, just like you said, and those are some of the things that I've been thinking about recently. These people are also inspired by certain people.
Yeah, true.
So the fact that these people also inspire us from here should make us also want to inspire some people.
Yeah, exactly.
So I think 15, 20 years down the line, we'd want to see some people coming into certain fields and saying the people who forced us to think or who influenced us to think and pursue certain opportunities or certain ways of thinking are certain people.
Yeah.
And we wouldn't want not to be in that category, just like you said.
True.
We'd want to pioneer such things like artificial intelligence, investing in the stock market, machine learning, investment banking.
Yeah, true.
There's a lot.
All those are new in Kenya. Hakuna hedge fund Africa.
Even
laws don't allow.
Exactly. And I think
so much.
It's hard, very, very hard for you now to do some of these things, but with time it gets easier.
Yeah, with time it gets easier.
So we want to make it easier for other people.
And the sooner you start, like, putting your head into such stuff,
the better.
Yeah, like, ujipate tu, regulations may change. Now we can do this and this and this and this.
Yeah.
Maybe tech may change. Maybe talent may improve.
Yeah.
Like, ujipate huko ndani.
Yeah.
True.
Yeah. So I think that's the last thing that we'll talk about. And the most important factor, I think, which is also what you said, we're now living in a globalized world. Your competitors are no longer the people around you.
True.
You're competing with everyone in the world.
Everyone.
So make sure your skill is that top notch.
Yeah, true. And I think that came to me from just trading. Like, I'm in a market participating with. Actually, the biggest sophisticated banks are not even in Kenya. The biggest traders, the banks with the biggest volume in that 6 trillion market is, I think, heavily in US and Europe. So, like, the fact that I'm in a market trying to make money and my competitors are in a Ray Dalio, it just shows you that you're in a global world.
Yeah.
Like, I don't think about competing with you or Caleb or the next fund. It's always like you're competing against very, very sophisticated people with capital, many employees. So it changes your perspective of thinking from that local short-sighted way of thinking to globalization.
And you understand also which fields to pursue, how hard it is to build some of these things, the level of focus that is required. I don't think you can master some of these fields with the culture that we have of working from 5 to 8 and just it's hard for us to develop some of these things. I think we really need to change the culture of work ethic. We really need to change the culture of risk taking, because you really need to take some risks. Some of these fields right now, where's you on a clear path to success?
True.
Could take a very big risk betting on some of these things. But I think also if we don't take those risks, it's very hard for us to maneuver and to change the scope of the world and to create other opportunities, because by the end of the day it's all about creating opportunities for other people to participate.
True.
So I think we'll stop there.
I have one last thing to say. So for if you're listening to us and maybe you're a guru, or maybe you have a passion in machine learning, big data, artificial intelligence, I'd love to sit with you guys in the office, share ideas on what you think on that frontier. Also, me, what I think on the financial markets and how we can merge talents, because I believe that's how we start. Like, you first have to meet people. So, like, I want to share ideas with those people. So if you're in any of those industries, just visit us at the office, just book a call or send us an email on when you want to come, then we can set up meetings. Yeah. So maybe for the next a month or two, we'll be having people over at the office. Personally, I'm very interested. From just reading this book, I'm very, very interested in sitting with people who are deep in computers. So I think, if you've listened to this and you're in that sector, you can give me a call or just visit at the office. Jaquad Towers, 17th floor.
Yep. So I think we'll stop there.
Yeah.
We'll catch you guys in the next one. Don't buy a boat is the message. Focus on developing your own trading
focus
system.
on developing your own system.
Yep.
Yeah.
So we'll catch you guys in the next one. Peace.